Hello everyone and welcome to this September 25th edition of Property Perspective. Today I have the pleasure to be with Matthieu Arseneau. Hello Matthieu. And with Véronique Corriveau. Hello Véronique.
Bonjour.
Our topic of the day, real estate and estate planning. But before we go into that interesting discussion with Véronique, let's talk with Matthieu about recent economic news that influence the real estate market. Matthieu, while the Bank of Canada slowly lowered its policy rate over the summer, announcing cuts of 25 basis points, the Federal Reserve, I believe, surprised economists by announcing a cut of no less than 50 basis points in the first announcement in September. What pace of cut can we expect from the Bank of Canada now that the Fed has entered the dance?
Simon, yes, that was a surprising one that the Fed is going with a 50 basis point with the start of in this easing cycle that we are getting into. Clearly, it opens the door for the Bank of Canada to do more if the Fed hasn't declined rates. It can have an impact when you decline rates on currency, pushing it down and ultimately lead to inflation. So when both central banks are going in the same direction, there's no impact on that front, and that opened the door for the Bank of Canada to go ahead perhaps with, and I hope will be inspired by that kind of move, so increasing maybe 50 basis point cuts in the next meeting. So let's hope they will go in that direction. Clearly, when we are looking at inflation data, a big milestone in August with the data that came out, inflation at 2% on an annual basis, that's the goal of the central bank. So that was really good news. And if you exclude mortgage interest costs, we know the central bank is mainly responsible of that increase for that component. So if you exclude that component, we are at only 1.2%. So for us, clearly, rates at those restrictive levels, it's not a good idea in the short term, and they should decline rate faster over the next couple of meetings to bring back inflation rates much more neutral in the coming months. Yeah.
Finally, a good news.
Good news on interest rate front. Yeah.
Mathieu, we saw that controlling inflation has not come without economic cost, as evidenced by the rising unemployment rate. How do you assess the economic health of the labor market presently?
Exactly. It's not magic. Inflation as moderated because there's economic weakness. And when we look at the unemployment rate, in fact, it continued to increase during the summer and it's now at 6.6%. Not that high on a historical basis, but still higher than it was prior to the pandemic. But there's no that much layoff at this point. It's much more a hiring freeze, on a macro perspective, with corporation not hiring and a big increase in population. So as a result, it's segment of population who try to enter the labor market that are the most impacted at this point. If we look at the unemployment rate for people, the younger one, and recent immigrants, in fact, the cumulative increase since 2022 is as large as what we experienced during the global financial crisis of 2008-2009. So for those segment of population is comparable to a recession at this point. So and my concern, Simon, is the fact that job vacancy rates are declining very fast. So that do not bode well for hiring in the coming months. In fact, it's the lowest since 2016, 2017 for those segment of population. So it's a warning for the central bank. Perhaps interest rate at current level are too high for the health of the labor market. As I recall, unemployment rate at 6.6%. That was the level back in 2017, and rates were at 0.5%. Versus 4.25 at this point. So yes, I'm not saying that they should go there, but perhaps between 2.5% and 3% very soon, that could be a good idea, so we won't have too much damage on the labor market.
Okay, remains to be seen. Matthieu, last question. What do you think of the government's latest announcement about raising the ceiling of insured mortgages from 1 to 1.5, and also giving first-time buyers the option of repaying their loans over 30 years versus 25 years? Is it a good solution to the affordability challenges?
We discussed a lot this affordability challenge over the past few months. For the first measure, the increase of the ceiling, we don't expect that much impact because most of the transactions are way below this threshold. So that's for this measure. For the other one, that could have material impact on the market. We made some calculation, and you can see the amount are a bit different depending of the province, but just a general picture, for the same house, in fact, if you increase the amortization from 25 to 30 years, you have a decline of payment of 9% on a monthly basis. And if you maintain the same payment, you can buy a house 10% higher in terms of price. So that gives you a leeway. But the big question here is it more affordable when you pay your mortgage for a longer period? So that's the first question. And if this option became very popular, at some point there could be an adjustment in prices given this increase in purchasing power of first-time home buyers, and it will reverse the initial intention. So that's a tricky part. No evident solution with that kind of measure.
All right, Matthieu, thank you very much for your very, as usual, interesting comments. Thank you. Let's now discuss with Véronique. Hello, Véronique.
Hello.
About real estate as part of the estate planning process. Many of us put off these important decisions thinking that they are either too complex or not necessary. Yet when the time comes, navigating the legal and also emotional aspect of passing down property can feel overwhelming. Véronique, a notary of extensive experience, is here to shed light on the basics and help us take the first step toward thoughtful thinking. To start, can you please explain why having a will is so important, especially when real estate is involved?
Yeah, it's important to have a will to ensure that we do not leave our wishes to chance. Mm-hmm. Having a will allowed the testator to decide for himself who will inherit his property, and to choose the person or the people who will administrate the property in the process of liquidating an estate. For example, in the case of common law partners, if you die without a will, your partner could find himself co-owner of the building with your legal heirs. It's not perfect.
You could say that. Véronique, one of the key aspects of estate planning is the transfer, obviously, of ownership after someone passes away. Can you quickly walk us through the process of transferring real estate ownership from a deceased person to their heirs?
When you inherit real estate, the liquidator of the estate must transfer the title of the property. This is what we call in legal language the declaration of transmission. By this act, the succession transferred the property right to the heirs, so the new owner of the building. It is a myth that we often have to deconstruct, that the transfer does not take place automatically in the will. This act is formalize everything.
Okay. Finally, Véronique, what specific considerations should heirs be aware of when inheriting real estate? Are there some challenges, pitfalls that they should be prepared for?
I can give you some example of, we can think of the co-ownership of a real estate. For example, in this situation, we should think about how they will administer the property together. Sometimes we can see some family dynamic in this kind of situation. We can also think of bequest of a building to minor children. If the bequest was made with or without protection mechanism, this situation can complicate the administration of the child property. And we have to think for the tax aspect too. It can bring us, for example, in the lack of liquidity when we put our heirs in unknown situation for the taxes.
Right, so important to consider. So thank you, Véronique, for sharing your insights today. Estate planning, especially when it involves a real estate, as we just saw, can be overwhelming at times, but as we discussed, taking the time to plan ahead can make a world of difference for your loved ones. We hope today's conversation helped clarify the process of estate planning and real estate transfers, and don't hesitate to discuss that important topic with your advisor. So thank you all for watching, and see you in the next weeks for your next edition of Property Perspective. Thank you.